The housing market isn't about to shift, it already is. And if you're flipping houses, you're standing at the edge of a fault line. Prices are softening, inventory is building, and most investors, they're still clinging to yesterday's playbook. But here's what seasoned flippers are doing right now. They're watching the cracks, positioning for impact, and quietly preparing for one of the biggest wealth transfers we've seen in over a decade. So let me break it down, you guys, because if you're trying to flip in this climate without a clear view of what's really happening, you're not just gambling, you're doing it blindfolded. Right now, interest rates are still hovering around 7%, and that's locking out the very people who would typically be your end buyer, first-time buyers. They're drowning in 20% credit card debt. Move-up buyers, they're frozen, sitting on 3% mortgages and no incentive to trade up. That's why in key flip-heavy metros, properties are sitting longer and price cuts are happening faster. If you're wondering why your last flip took 45 days instead of 12 to go under contract, it's not just you. And this gets more serious. The investor exit is real. Hedge funds and small landlords who bought during zero-rate boom, they're offloading. Retirees are moving out, and institutional capital, it's moving to the sidelines. That means the market is quietly flooding with inventory, and it's happening fast, my friends. In fact, cities like Phoenix, Denver, and Austin, over 30% of active listings had price cuts in the last 30 days. I've talked about this in my last previous videos. What does this mean for house flippers? It means your margin is under pressure, your buyers are more cautious, and your competition is increasing. But it also means something else. The opportunity is bigger than ever if you play it smart. That's why the most successful flippers we know are turning into every shift. They're studying where the distress is and where the demand is still quietly active and which zip codes are about to pop. You guys, we track this weekly inside Deal Watch, our private breakdown of the exact flips we're watching in emerging opportunity zones. If you want a front row seat to the trends before they go public, the link to Deal Watch newsletter is in the description below. We don't just tell you where the activity is shifting, we show you how to move first. But let's talk risk, my friends, because if you're ignoring these signals, you're doing more than flipping. You're flipping into a slowdown, and slowdowns don't kill flippers, bad timing does. See, this isn't 2008. We're not heading for collapse caused by bad lending, but we are seeing a slow motion affordability crisis that's forcing the market to adjust. And when that adjustment comes, the pain hits fast. Your comps drop, your buyers ghost, and your profit margin evaporates. 1 week, you're on track to net $40,000. The next, you're just trying to break even. So how do you protect yourself? You get ruthless, absolutely ruthless about your numbers. You negotiate like inventory is your ally, and you stop flipping for today's comps and start flipping for next quarter's reality, because that's where the smart money's going, into affordable markets, into flips with real margin, into deals where the exit plan works even if the price drops another 5 to 10%. Want to know where those deals are actually happening? They're in the data. They're in the specific counties where days on the market are still holding strong, where demand from out-of-state buyers is quietly supporting real estate value, and where builders are still investing because they see future growth. Now, I know what a lot of you guys are thinking. That ain't happening in California. It is in certain counties in California, so just pay attention. And if you're smart about it, you can find opportunities anywhere. We map out these little pockets inside of Deal Watch, and every week our newsletter shows you where to go and where to stay far, far away from. Just a reminder, the link is down in the description. But here's the real truth. Most flippers won't make it through this market shift. They're using strategies built for the boom. They're relying on stale comps. They're guessing. But if you're watching this, you already know better. You're watching the signs. You're doing the work. And when the dust settles, you won't just still be standing. You'll be holding properties that appreciate while others are scrambling to unload. The crash isn't coming. It's already unfolding. But for the house flippers who move early, adapt quickly, and stay informed, it's not a crisis. It's a reset. And resets are when wealth is built. If you want weekly access to the flips we're watching, market-specific inventory trends, and pricing plays you can actually act on, subscribe to the Deal Watch. That's where we share the real stuff. And if you want more insights, hit that subscribe button and stick around. We'll see you on the next one. Bye!